All right, welcome to another episode of JYR Trades. Today is Wednesday, April the 8th, and let me tell you what a day it was to listen to the market and listen to it well so that we could speak back to it and perhaps make some money. All right, now before I continue, as always, guys, everything that I post on this channel is for educational purposes. Nothing is financial advice. However, if you want to learn how to trade market structure, if you want to learn how to trade auction theory, equilibriums, liquidity, if you want to learn how to trade like the big institutions, then you're in the right place. Welcome to JYR Trades. As always, guys, if you want to learn how to trade like the big guys, like the big banks, please hit that subscribe button, like, share, and comment. All right, then with that said, let's go ahead and get started. I'm going to start again, guys, with a typical quick description of what I'm going to cover in this video. All right, so today, guys, was a powerful lesson in imbalance and expectation. Coming into the New York session, price was extremely stretched, over 800 points away from the previous New York value. Asia pushed aggressively higher overnight. London held those highs, and both POCs and mids were leaking north. Okay, this created a clear imbalance scenario. When price opens this far away from value, the market typically has two choices. Okay, all right, it's either going to continue with a continuation or it's going to begin a repair. All right, today we saw a controlled repair. The move was not explosive, it was steady structure rotation lower, respecting levels, reacting to POCs, and confirming through Remitar signals. In this video, guys, I'm going to break down how I identified the imbalance, why I expected to move back down, and how I executed two clean trades, and what I'm learning about build versus confirm behavior in Remitar. This is more than just trading, guys. It's learning how to read the story before it unfolds. And literally, guys, that is what's happening every day that I'm doing these videos and I'm journaling. Okay, I'm beginning to see it more now before it even actually starts to form. Okay, and that's an exciting part, right? All right, guys, so let's start with the introduction. Today was an interesting day, guys. It was what we call a textbook imbalance setup. Now let's talk the first thing, the pre-market context. Very important that you understand. Asia overnight, guys, this is right here. Look at the screen. This is where New York PM ended yesterday. And when you look at what Asia did yesterday, my gosh, it literally decided to move up 800 plus points. Okay, all right, price was 800 points away from value. Okay, London, what did London do, guys? Well, London decided, hey, we want to hold the highs. No need to come down and try to repair. Nothing like that. POCs, where were they? They were leaking north. You can see one POC here, another POC here. Okay, our mids, this one here and this one right here, London and Asia, both leaking north. So at first glance, guys, when you look at this, all right, you know, where is our value? Our value is down here, right? These two white lines represent the New York value. And what are we thinking? It's pushing north, right? That's what we're thinking. The problem was the imbalance. That's what the problem was, though. Because when it creates something like this, large overnight, and we have to go from our previous zero to our new zero, it's either going to continue, it's a possibility, but more than likely it's going to repair. Okay, all right, so what was the expectation, guys? Now, when prices is far from the value, guys, repair usually becomes more likely. Now, I wasn't trying to guess a direction. I wasn't trying to, okay, is it going to go up, is it go down? My hunch was telling me, based on the length of the migration of Remitar, the way it was already far away, 800 plus points, I was already reading the condition that we were probably going to go into a repair of some sort. Okay, the question wasn't is if it would move, it was how it was going to move. Okay, all right, so how did New York open? Let's talk about the open behavior, because this was crucial in understanding, okay, understanding what was happening and the trades that I took. Okay. All right. So New York opens, and as you can see, guys, we have my Remitar versions. We have this cloud figure here. This is my no trade zone. We have our Remitar post migration 0 here. All right. I do have my fib here. In case you're wondering how I get my fibs, I measure both from the very top of London and Asia down to the very bottom. Those points, whatever those points are, I think today was like 900 points or very close to that. Half of that, the 0 to 1, that's how I measure that. And I put my 0 when New York starts. If my post migration does not move a whole lot, I leave it where it is. But if it does move quite a bit, sometimes I'll put a secondary 0. Okay, but anyway, so let's go back to the move, guys. It wasn't explosive. Sometimes when we're this far, it will be violent, it will explode. And what I mean by that is you'll see large displacement high body candles moving towards repair quickly. Today wasn't that case. Okay, it was a slow tempo. Okay, slow tempo. Let me zoom in here a little bit here for you all. And so it was a slow tempo, small candles, nothing great, controlled movements. Okay, now my first trade, guys. Well, I'll tell you what happened here. Price. Now I'm beginning to understand the movements of price, especially when we're in repair continuation. Okay, because I knew that we were gonna go to the downside based on everything. What I felt was okay. It's going to give me a fake move to the downside, then uh, possibly a reclaim, not a fake, a fail move, excuse me, to the top side, and then it's going to start with the real move. Now I will say that initially when I saw this right here, when I saw this candle tag post migration 0, I felt that this was the entry, and so I kind of waited for confirmation. But to be honest, this was the actual, in my opinion, the entry. Once I gave the next candle gave me a continuation to the downside. Okay, continuation to the downside. That's where I decided to go in. Okay, now I went in. I think it was right around here. Okay. And already Remitar's, my first version, did give me a short entry, and I started getting some profit. But then I started to see that we started coming back. Now I tell you, I saw the structure. I saw that it was coming back to my Remitar 2.0 white line here, and I said, okay, look, if it comes here and it holds, then we're good. If it comes here, then there might be a possibility, and once it crosses this over here, then it may break the structure, right? And my trade might become invalidated, but it did not. Okay, what did I target, guys? I targeted VWAP. I put a take profit here at VWAP, and actually, by the time this closed, I mean my take profit was almost double from what I actually had was kind of projecting there. Okay, but anyways, took a good take profit here. Okay, and I decided to just just kind of be patient and wait. And this is the thing. I waited. I saw that. I took the move. Okay, and here, what happened here? We started to see kind of price give a little bit of a compression here. Now, what I was keeping an eye here, guys, when I'm seeing here, is I'm keeping an eye on this POC, right here. That's what I was keeping an eye. All right, and I'll tell you, once it broke below the POC, and then I saw that we were below Remitar 2.0 red line, and price was below Remitar 2.1, the smaller bands here. Okay, and I saw that we had a pullback. I went in here and I targeted somewhere between the 50 and the 62. I did not feel comfortable targeting beyond the 62, and the reason why I didn't feel comfortable was because, one, guys, even though price only moved to this negative 62, because sometimes we've seen it goes all the way to the negative 2, the negative 1.5. You got to remember that today price was already overstretched over 800 points. So when you look at this move from, say, here, the top of the move, to here, that's already 237 points. That's a big move on a normal day. And we're barely at 8:58 a.m. in the morning. Okay, an hour and a half after market open. This was a solid move here. Okay, so targeted that. This one had very little drawdown, this particular trade, because once I entered here, I mean, it just went. Okay, very little. This one had a little bit more because of this move here, but again, I saw my structure and I felt good. I saw that it wasn't going past this, and 5 minutes later I had hit my take profit. All right, so, and this is the thing though about the second trade, guys, that this was aligned. When you have a trade that gets very little drawdown to none, you're aligned with the structure of the market. I think here, if I had taken the trade here once I saw the first rejection off of auction, post migration auction 0, I think I would have been fine with the drawdown, to be honest with you here. But it is what it is. I waited a little bit longer, went in here, and I held through drawdown and eventually hit my take profit. Okay, now guys, like I said, today, I kept seeing moves throughout the day. All right, and I gotta tell you, once price hit this bottom tier and I saw that price had gone over Remitar's 2.0, all right, and it got rejected, came back to around the 50, and then started coming back up here, I realized here that this was possibly already an entry for a long if price decides to hold above Remitar's 2.1 on these EMAs. And once it did, you can see that it just started going. I know that here I have these signals like an early short, but I'm going to tell you why I would ignore this here is because, one, price is above these or in between these EMAs here, and you can see this thick 2.0 EMA here from my Remitar 2.0 system, and this was a support, and look what it does, goes to it. So really price, I mean, once it goes back into Remitar 2.0, gets rejected, comes back in, gets rejected at the support level, and then we have a move for another one here, and kind of similar over here. Okay, once we come back down into our whites, okay, and we get some rejection at the green here, the green line, and we have our EMAs lining above us price, then that is telling us here that we have a good short here. Again, this early long I would have ignored it here because, again, price is under the EMAs. We want to be we want price to be under us, and I mean the EMAs to be under us for a long here. But anyways, so guys, real quick question, because on my title you're gonna see that, not a quick question, but real quick explanation here on the topic here is that why didn't market repair all the way down here? I mean, this is where New York value was, and the reason why is because you can see that the POCs were up here, guys. If the POCs had been down here, even outside of value, it would have still signified a continuation possibly, or whatnot, or a repair. But this is the thing, it gave us a partial repair because at this point the market was deciding, hey, we're okay with prices up here. We're okay. We don't need to repair all the way down. We're accepting a higher value, and that's basically what the market did. So yeah, it did give us some repair. Remember, this was 250 points. I mean, by all standards, by normal standards, 250 points repair, partial repair, is a good repair, right? So, um, that's one of the things that I want to talk about, because yeah, it didn't fully repair, but it gave us a partial repair. And what's the reason? Price was accepting a higher value. It didn't need to come back down over here. Okay. To be honest with you guys, I mean, I I thought the -1 was a stretch today for it to repair that much, because again, 250 points here. This was a lot. Okay. All right. So and guys, when you're looking at this here, when I'm looking at it, guys, I'm not chasing signals. Even though I get some of these confirmations I don't actually put them on when I'm actually looking at the charts. It's afterwards, okay? Because I really don't want to depend on them. I want to be able to confirm, okay, then depend on an actual signal or a label of some sort, okay? And so that's the last thing I wanted to cover about that. All right, guys, and again, guys, I'm starting to see the move before it happens. That's really the biggest thing, more than anything. Seeing the market every day, analyzing it, journaling the videos, okay? Going back, looking at the videos, looking at the pinned comment, because remember, in the pinned comments, I'm going to have the actual journal that talks about what happened in today's pre-market condition, what happened during New York, and I put a picture in there as well, so that you can get a visualization of what it is that I'm speaking about, and hopefully that will help you as well. Okay. Well, guys, this is it. This is the end of the video. As always, if you enjoyed this video, if you learned something from this video, please hit that subscribe button, share, like, and comments. I will tell you, stick to it. Don't give up. Journal. Analyze the markets. Look at the charts. Have an edge. Follow your rules, and I promise you're gonna start becoming consistent with it. Okay. And so, with that said, till next one.